Well, hello and welcome to BloombergQuint. I'm Yash Upadhyaya, and joining me for a very special conversation is Mr. Chandresh Nigam, who's the Managing Director and CEO at Axis Mutual Fund. So thank you so much, first of all, for taking the time out and speaking to us. So you are coming up with a new fund offer, which is called Axis ESG Equity Fund. Can you tell us more about what this fund is? And it's a relatively new concept in India. Only a handful of AMCs have this scheme. So what is this fund about, and how is Axis going to differentiate itself from the competition?
So, Yash, this is something which we feel very happy, very proud about. I think it's a real milestone in Axis's investment journey. As you would have you've probably tracked the way Axis's equity funds have performed. The performance has been really good, and it's been on back of what we call about sustainability. Right. So whenever our fund managers and analysts have gone about looking and trying to invest in businesses, the first focus has been on how sustainable the business really is. And from that perspective, we do all kinds of financial analysis and understanding of the company's sustainability of their competitive advantage, etc., which is what leads to that sustainability. Now, increasingly what we are seeing is that, yes, these financial parameters and factors are important, but globally now non-financial factors, and essentially ESG correspond to that. Non-financial factors are having a big role in how businesses do and perform and how sustainable their businesses are in the long run. Absolutely. So E is environment. What is the impact of the environment on your business and your impact, company's impact on the environment. Similarly, societal trends and whether they are in favor of your business or your impact on society if it is negative. And similarly, governance factors. Investors want to see more transparency, etc. Now, the reason why this is becoming important is earlier probably customers or governments or regulators are not focusing that much on these, but today you can very easily have laws which come out which can really just sound a death knell for your business, or you may have to really change the way you do business, especially on the environment side. So companies, and it's not something which is new. We have been actually already seeing these kinds of things, banning diesel vehicles older than a particular age, etc. These impacts are already being felt globally as well. Many of these things have happened. So if you are a company which gets affected by these, obviously your longevity of the business and sustainability is in question. The other important thing is many investors are also getting into the bandwagon, and they basically, and globally it's become a very large theme, and most institutional investors globally will not invest in a fund which does not incorporate ESG analysis in their investing. So what we are doing at Axis is to bring out a product which we will manage incorporating ESG principles in mind. This has two things. One, long term we anyway improve on the sustainability metrics of the portfolio, which means better performance. Also, and interestingly, it cuts down the risk. If you are seen to be a ESG compliant or company with solid ESG practices, it's probably easier for you to raise money, many times cheaper price. Or also in equities, you generally tend to get higher PE multiples if your business is more sustainable. Yes. So I think ESG will further improve the risk return metrics of investors from a long-term perspective. And that's the reason we are very proud to come out with this product. Lots of differences between us and what we believe exists in the marketplace. The most critical being that it's not a tick box approach for us. Right. It is something which we will incorporate in our investment process. Governance standards, etc., were already there in our investment process. We will incorporate the environmental impact and social impact of businesses as well, and further fine-tune our processes to run this fund.
All right, so that was quite a comprehensive answer, but if you could also help us understand what would be the construct of this fund. Will it have a larger tilt towards a certain market cap of stocks, or would it be spread across market cap? And also the kind of data points that you mentioned, you will get that sort of data, that sort of information largely for stocks within the top 100 space. So would it be a fund which has a very low risk? Can you help us understand all these factors as well?
So as it is as it is constructed, it's envisaged, it's going to be a multi-cap portfolio. We think there are opportunities across the space. There is generally a tendency of larger companies to give out more data, so that makes the analysis easier. Right. But so in many cases, the data will be easily available for us to do analysis, but then our responsibility does not stop there. If there are good companies or otherwise in the mid-cap or small-cap space, we will be on the lookout If you don't have enough data, we will go and ask them for data, and we will come and gather other data to do our analysis. So this will be a multi-cap product. And additionally, what we have done is that ESG is something which has been very much in focus globally. And in fact, more than $11 trillion just in the US market, which is 1/3 of the US market cap, is already run on ESG principles. So we have decided that 30% of the portfolio will be invested in foreign companies, which are run on ESG principles or score high on ESG. So that will be the construct: 70 India, 30 global ESG, and within the India's portion, it will be a multi-cap strategy.
And we could not let you go without asking you about markets, obviously. And the beauty of this fund is the fact that it is a multi-cap scheme. Now, we've seen across the board for the different schemes that you have, the outperformance come in not just for the year of 2019 as well as 2018. And that was down to your philosophy of sticking to the high-quality, large-cap names, sustainable companies. But surely in a very short span of time in this year of in the month of at least January, we've seen the broader markets start up with their participation. How are you looking into these things, and which are the sectors where you're starting to see some green shoots coming in?
Okay, so our sense is that the Indian GDP growth kind of bottomed out maybe second quarter, third quarter, and now it will start to improve. It's on back of basically the credit cycle. I think whatever we saw in terms of the NBFCs getting affected and actually just many of them withdrawing from the lending market, as also the risk appetite which came down in the rest of the companies and the banks which anyway were there, I think that is going to get loosened up, and people are actually thinking of going back to business. In terms of risk appetite might go up a little. But this will lead to some kind of an improvement in the economy. So our sense would be that next year GDP, obviously it's still early days and we'll see how it evolves, but next year GDP overall environment should be better than what we have seen in the last year. And that will lead to some kind of broadening of the market. You will see many companies which were badly affected last year will start to make some business gains this year. Where are we seeing these? I think automobiles is the first case. I think they were really badly affected. Things are really coming back there. Some of the NBFCs which had really slowed down, I think they are starting to see some initial signs of that they wanting to go out and do more business. Consumption should be a big beneficiary, especially when the rains have been good. The Rabi crop is expected to be good. Right. So rural demand, wherever companies which have significant rural demand and have been badly affected, I think you will start to see some improvement. So I think some of it is already visible, but a lot of it will probably come in as the economy kind of revives. But the base case is not as if that we will have a runaway growth. I think there are some challenges in the economy. But overall, I think it should be a good, interesting time for investors with many more opportunities.
And absolutely, we are also in the midst of the earnings season, and almost 1/3 of the Nifty earnings, they came just over the weekend. We had TCS, Reliance, as well as HDFC Bank come out with their numbers. What is it in this earnings season, at least so far, that has stood out for you, or what are the key earnings that you would be looking out for going ahead?
So I think earnings, as far as we are concerned, have been largely on track. I think there has not been any major surprise, and certainly no negative surprises till now as such. So I think it's the markets are forming a base. People's expectation, analyst expectations are also kind of come down. So I think all that, save for some real negative surprises, I think we are seeing reasonable performance largely across most sectors. You've seen significant drop in the last 2 quarters, and this quarter we should start to see some stabilization and more to come later. I think what will be more critical is the next 2 quarters earnings. And this is right now we are probably passing through a trough. So we can't expect too much right now in this quarter, but the key metrics would be to see the next quarter. So this quarter is largely about seeing if there are any significant downside which people report. As of now, it doesn't look like it, and hope it's not there. But that's what you would kind of look like, because the growth is something which you will look for in the next 2 quarters.
All right. And so lastly, in the absence of any negative surprise, everything looks like, positive from here on, at least as far as the economy and the corporate earnings as well as concerned. What do you think could be one reason that could possibly delay this recovery in the demand as well as in the economy? What could be the joker in the pack, according to you?
So I think global. I think global economy has been there, or rather, the expectation has been that it will kind of weaken quite a bit. I think all the negative factors which had to happen have happened. The fiscal deficit, the spending cuts, the rural stress, etc. I think a lot of negatives we've already seen, and slowdown in export growth, etc. A lot of it we have already seen. Right. So I think from here the expectation should be that it should kind of recover. Just cyclically it should recover. Whether structurally it happens or not, we will have to see over a period of time, but cyclically it should happen. What can really dent it is real pessimism. Something happens on a global perspective and people just withdraw, consumers' confidence comes down, they don't invest. Businesses anyway have not been investing in, and that's why we think that the recovery process will be slow. But if something happens which completely changes risk appetite of businessmen, I mean, the business confidence index really takes a further beating. It's already low. If it takes a further beating, I think it will have to be some international factor which will affect that. Else, I think we are in a bottoming out kind of process and things should start to improve on multiple parameters.
And so what, according to you, do you believe the government needs to do in order to boost this business confidence? Because like you rightly mentioned, there hasn't been that great of an offtake as far as liquidity is concerned. That has improved, but the offtake hasn't been that great.
No, I think at the end of the day, it is a buyer's strike. I think demand is what needs to needs to recover. And if the demand comes in, then I think all the other wheels of the economy will turn in motion, and those gears will come in place. So demand has been weak for multiple reasons. The biggest one obviously happens to be rural. I think rural India has...
So are you expecting any reforms coming in the budget?
Something on those lines which puts more money in people's pockets so that they can go out and consume and add to demand, I think is what I would be looking for.
All right, sir. We live it at that. Thank you so much once again for taking the time out and speaking with us. Axis ESG Equity Fund, the NFO opens on January 22nd. For more news and analysis, stay tuned to BloombergQuint.